from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, ending where it began. Bitcoin hovers around 32,000, much where it started this Tuesday after dipping to 28. Why is this happening, and how low could it go? We'll get investor insight. Plus, free ride. I'll talk to FCC Commissioner Brendan Carr, who says big tech has enjoyed piggybacking on our internet infrastructure for too long. He wants them to pay their fair share. And the VC view on diversity. Silicon Valley isn't doing nearly enough to support founders of diverse backgrounds, but one fund is trying to shake up the status quo by supporting only Black founders. We're going to talk to the investor leading that charge. We'll get to all of that in a moment, but first, for just a blip in time, Bitcoin turned positive after tumbling below $30,000 and erasing all the gains it's made for the year. The original cryptocurrency now down more than 50% from its mid-April high of 65,000. Seems almost so long ago, hard to remember. Our Ed Ludlow here with more. Ed, break down the market moves of the day.
To contend with all that, you also had Fed Chair Jay Powell talking to lawmakers on Capitol Hill. That helped boost U.S. equities higher, rising for a second day. The NASDAQ 100, a very tech-heavy index, being led higher by the likes of Apple, Amazon, and Microsoft, which hit a market cap of $2 trillion for the first time, bringing that index to a fresh record high. But Bitcoin is where the action was at one point erasing its gains for the year, falling by as much as 12%. Now, as we spill into Wednesday's session, we're up near $33,000 for Bitcoin. That also had an impact, of course, on the Bloomberg Galaxy Crypto Index. You saw other coins falling away, including Ethereum, down by almost 3% on Wednesday. In the equity markets, there were some stock stories that I want to look at. One of the laggards among big tech was Google parent Alphabet. A lot of antitrust scrutiny from Europe and India. Elsewhere, GameStop surging after a $1.1 billion stock sale. Splunk surging after a private equity investment of more than $1 billion. And Peloton making gains after offering employee discounts and a new armband wearable. And finally, let's just go back to cryptocurrencies. It's not all about Bitcoin. You forget there are other moves as well. Ethereum actually has done remarkably well, been more resistant than Bitcoin has, and Litecoin also making moves on Tuesday. Emily.
All right, Ed, thank you. We're going to talk about this a lot more. Getting to that conversation now, Bloomberg caught up with the CEO of Binance, one of the world's largest crypto exchanges, at the Qatar Economic Forum. He talked about Bitcoin's big drop. Take a listen.
With the price, we don't know what's causing it. There's a lot of news that's going on right now. There's positive news and negative news. From our perspective, we just see people trade or placing orders. So, but if we compare to like a year ago, like the markets are still like 10x bigger, 10x more active, etc. So we think it's still a pretty healthy market.
To discuss, I want to bring in Matt Maley, Chief Market Strategist at Miller Tabak, and Leah Wald of Bitcoin investment management group Valkyrie, which has over $200 million in assets under management. Matt, I want to start with you. Seems like even the CEO of Binance has no idea why this is happening. What do you think? Why did it get so low today, then minorly bounce back, and where does it go next?
Well, of course, it's always hard to know for sure, but one of the things I do worry about on an intermediate term basis, because I love Bitcoin and several other cryptocurrencies on a longer term basis, and I think Ethereum in particular looks good here. But we do worry that at least part of this move, and again, I'm a long term bull, but part of the move we've seen since the big rally we saw initially from March until May of this year, March of last year until May of this year, has been pushed by the excess liquidity from the Federal Reserve. Yes, it would have gone up on its own, but I question how much more it has gone because of this excess liquidity. And the reason why, of course, we're starting to see the Fed start to talk about tapering in a more serious way. I mean, despite what the Fed chairman's saying, the rest of the Fed is laying the groundwork for a taper this year. And so, some of that froth has to be pulled out of the cryptocurrency, which is good. I mean, these cryptocurrencies are going to change the world, but we have to remember that Amazon changed the world too, but it got out of hand a little ahead of itself in 1999, 2000, came down in a big way, and then was able to rally rally back over a longer period of time. And that's kind of, I think, what we're seeing right now in Bitcoin and other cryptocurrencies, which could mean that we'll see a little bit more weakness before we see a great opportunity to buy it for the longer term holders.
Obviously, it seems like in the short term, we're seeing the impact of some of these decisions being made in China, Leah, the crackdown on mining, the crackdown on crypto transactions. How do you see that playing out in the short versus the long term? I mean, is it a good thing that the center of gravity could move to other countries for mining or not?
I do think it's a good thing in the long term. It's very dangerous to not have decentralization in a currency that's based on the principles of decentralization. I think that sentiment around Bitcoin is very bearish right now over those worries of, stemming really from the dual threats coming out of China of the mining ban and also crackdowns on crypto transactions. So I think it's, a little more broader than that. So many investors are then concerned about how this will affect demand, volumes, hash rates more. And we're seeing a lot of selling right now due to that uncertainty. Now, what you're also seeing, though, as to your point about China, is mining rigs are now being relocated to the United States. So the question is, how will that affect price when they get turned back online, when they're in a new location? And I think that that will be a very positive position.
So curious then, Matt, if you think it could go lower, how low could it go and when?
Well, I mean, it's interesting. Today we saw a real big pickup in volume, which a lot of people would say was kind of a washout trade. And of course, the technicals have been such a big, important driver for a lot of these cryptocurrencies for the last, certainly in recent months anyway. And when you get that kind of washout move, that really gives you, an impetus to say, okay, all the sellers are done. We're going to see a nice rally. The problem is we saw a similar move on May 19th, and the rally did come, but only lasted a couple of days, and we rolled back over. So to answer your question more directly, if we do indeed roll back over again, I'm looking at the 27,250 level. I know that sounds a little bit specific, but right around the 27 level. That would be a 68% retracement. In other words, Fibonacci, these Fibonacci retracement levels, 68% retracement of the rally from March 2020 until the highs we saw just recently. That would be, I think, a great opportunity. We would probably get that washout move on the technical basis. We'd get that kind of that sentiment to move all the way to the bearish side of the table. And when that happens, then again, there's nobody left to sell. So that's the kind of level that I'm thinking that that people want to watch. Having said that, I do need to point out that watch that 200-day moving average on Bitcoin. That's at 43,000 right now. That it is rallied up to that level twice, and it's provided incredibly tough resistance. So I guess my point is, if you see a rally above that 200-day moving average before you get the next decline, don't wait for a decline anymore. It's going higher, and it's going to go to 50,000 and a lot higher. So those are the two technical levels I'm really watching: 200 on the downside, 43,000 on the upside.
Okay, so Leah, A, would you agree? And B, what are you telling your clients to do? Are you telling them to diversify? Are you telling them to get in now, or to diversify their crypto assets to get into Ethereum as well? What's the direction?
Yeah, I think that's a really good question. I think it's a great question. And to address my other panelists, I definitely don't disagree. I think that right now, both the technicals and fundamentals are actually a little difficult to discern. I know that may sound like a cop-out, but on one hand, you have technicals that are looking very scary and bearish, but also with the swing, some are talking about a Wyckoff spring. You're looking at some technicals that actually do look fairly good. From our research, we're a little lower. We think that the support is more around the $25,000 level, and that's mainly because historically that's where a lot of corporations and institutions were stockpiling Bitcoin. To your greater question, it's interesting, but a lot of our investors are more long-term hodlers, if you will, and value investors. So, we have a series of trusts as an example. And for our Bitcoin trust, it takes a very different mentality for investing in a trust than, swing trading in the market right now. So I would actually say that, we're seeing inflows during this downturn, has actually been quite interesting for us. Obviously, a happy move. But I'd say that there's a lot of investors out there, and you can see Saylor today, right? From what I was told from a partner today is that MicroStrategy now owns 1 in every 200 Bitcoin that will ever be minted. So you see a lot of panic selling. That's correct. Narrative driven. Absolutely. But Saylor is panic buying, right? So I think that the importance of, one, going back to your original question, is just the importance of sufficient decentralization and liquidity providers and generally in the ecosystem is necessary. But I think you have different types of buyers at these levels, both at 3,000, 4,000, 40,000, 50,000, 60,000. But we are seeing a lot of inflows right now of value investors.
Amazing. And what a stat there about MicroStrategy. Matt, we're going to have to continue this conversation another time. We could talk about this for hours, but we got to get to a quick commercial break. Matt Maley, Miller Tabak, Chief Market Strategist, Leah Wald, CEO of Valkyrie. Thank you both so much for joining us. All right. Coming up, we're going to hear about the rise of the Google Cloud with Alphabet CFO Ruth Porat as the search engine giant competes with Amazon and Microsoft. Her view from the Qatar Economic Forum, powered by Bloomberg, is next. This is Bloomberg. Alphabet CFO Ruth Porat says the company is excited about its investment and opportunity in Google's cloud. She sat down with my colleague Eric Schatzker to talk about how the pandemic has massively accelerated digitization that will endure for the long term. Here they are from the Qatar Economic Forum, powered by Bloomberg.
There has been a dramatic acceleration in the digital transformation. Trends that were playing out over a number of years have really been telescoped in, and you can see it in commerce, you can see it in content, entertainment, education, you can see it in telehealth, you can see it even in the way we're having this conference today and the way we all work. And I think one of the important points for everyone is that we don't see the clock turning back. We do see that these trends will continue to endure, and I think it's really important for each one of us to consider how we can embrace digital tools and technology to support both revenue opportunities and efficiencies in our own business. So, for example, and to your question, when we look at small, medium businesses, which are the backbone of economies, what we saw during the pandemic is 1 in 3 small businesses said they would not have survived if they did not have digital skills, because it enabled them to immediately pivot and find their customers where they were in the online world, to get them the information they needed to talk about things like delivery or changed hours. And so these digital skills were absolutely imperative for survival.
The race, I would call it a race, to deepen relationships with customers and consumers is a fiercely competitive one. What is Google doing strategically or tactically, perhaps, that is different from what your competitors, the Microsofts, the Amazons, and the Facebooks are doing that you think ultimately is going to play to your advantage?
One of the main things that we're focused on is how can we stay close to our users and customers and provide them with the tools and skills that they need to be most effective as the world continues to accelerate in this digital transformation. And our ability to leverage differentiated AI has been helpful for all of our customers, for users. People don't even appreciate how often they're using AI in every day. So for those of you who are traveling around the world and opening up now to more travels, when you look at natural language translation, that benefits from AI. When you're asking the question of how do I get to find a store near me that's offering the services or products I want, again, we benefit from AI. So on the user side, really critical. On the enterprise side, what we're really excited about is the investments and opportunity in our cloud business. And our cloud business really is benefiting from extraordinary data analytics, the AI behind that, and then we've brought in talent to focus on very industry-specific solutions. So, for example, in financial services, my old home, one of the key pain points was always the manual intensity around risk and risk analytics. We can leverage things like Know Your Customer or anti-money laundering with AI and data tools. So those are important, and we go to customers and it's like, here's how we can help either with revenue upside or efficiencies, leveraging the tools that we have. Same across retailers. They're looking at how can they ensure that they've got the best supply chain management when we've all lived through what we've seen. And so again, the benefit of AI. So we're looking across the board. I would say the other element of it is how can we be most supportive to the communities in which we operate? And part of that is ensuring that we're working around the globe to provide digital skills training to people so that everyone can participate in this rapid digital transformation.
Ruth Porat there, the CFO of Google parent Alphabet from the Qatar Economic Forum, powered by Bloomberg. All right, coming up, should big tech pay up for the demands it is placing on America's internet infrastructure? Or should that cost fall to consumers? FCC Commissioner Brendan Carr says the free ride that Apple, Google, Facebook, and more are getting needs to end. He'll join us next. And as we go to break, NVIDIA shares up more than 40% for the year so far. Raymond James has raised its price target for the chip maker from $750 to $900, citing that it's best positioned for long-term growth. Meantime, the company is pushing a chip just for crypto miners, a group that in the past has snapped up higher performing semis aimed at its core game space. This is Bloomberg. It's like taxing horseshoes to build a highway. That is how FCC Commissioner Brendan Carr currently describes the Universal Service Fund, which taxes Americans' phone bills to not only fund their telephone network, but also their broadband. Commissioner Carr says the current model relies on an ever-shrinking base of revenue from traditional phone lines to fund an ever-increasing demand for broadband, and that big tech is, quote, getting a free ride. That companies like Apple and Google should pay their fair share. Earlier this month, I spoke with FCC Acting Chairwoman Jessica Rosenworcel, and she responded to what Commissioner Carr has proposed to revamp America's communications.
Well, you know, it's an intriguing idea, and we're going to need ideas because the universal service system that the Federal Communications Commission runs, well, it was set up by a law from 1996 when I had a Palm Pilot and an AOL account. So it's okay to look at fresh ideas. I appreciate that my colleague is coming up with his own, but in the end, those choices are really going to be made by Congress, and I hope we can have a good discussion about it.
I want to bring in FCC Commissioner Brendan Carr now, who of course has now served under two presidents, both President Biden and President Trump. Commissioner Carr, thanks so much for joining us. A very diplomatic response from the acting chairwoman there. What do you make of what she said, and what have your colleagues, other colleagues, had to say about your plan?
I've been really surprised by the bipartisan support that we've seen. As you noted, the acting chair, some of my colleagues have spoken about it. Lawmakers across the political aisle have given favorable responses to it. And to your point, most consumers don't know that right now they pay this 30% fee, or it operates like a tax, right on their monthly bill for telephone service, whether it's wireless or wireline. That number used to be 5 or 6%, and it has recently getting stuck in a death spiral where we're over 30% now, this fee or charge ending up on consumers' monthly bills. And so I put forward an idea that would eliminate that from your monthly bill and put big tech to the task of paying a fair share for this internet infrastructure they benefit from to the tune of trillions of dollars.
Well, and to be fair, consumers benefit from the infrastructure as well, and they're getting a lot of these internet services for free. For example, they use Facebook for free. So in your plan, how much of this tax should consumers bear versus big tech companies? Do you think big tech companies should pay the lion's share of this?
Yeah, of course. I think right now it's 100% borne by consumers and 0%, as far as I can tell, paid into by big tech. And I think that we should flip that around, and the lion's share should be paid for by the businesses that benefit. If there's a small portion that continues under the old system, I'm not opposed to that, but we need to make this fundamental shift going forward. The reality is this is consistent with past precedent. Historically, communications networks in this country were paid for in the main by the businesses that benefited. Now, it used to be 1-800 numbers, fax lines, long distances. It was those businesses that benefited from the network. They paid the majority, that drove down the cost for consumers. But as big tech has arisen, we failed to update our approach so that these new businesses that are benefiting so much from these high-speed networks are paying a fair share towards those networks.
What's the response you've gotten so far from big tech? Have you heard from them?
Well, yeah, big tech has not given a bear hug to this idea. I think they put out a statement, one of the trade associations, saying that we shouldn't punish innovative companies. And frankly, I don't obviously view this as a punishment to ask these large corporations to live up to the same measures that everyday consumers pay for when they pay in. You look at this COVID-19 pandemic, a black swan event for internet traffic. European regulators asked Netflix and other streaming providers to degrade the quality of their service because they were taking up so much bandwidth. We didn't have to do that in the US because our networks were robust, they were resilient, and big tech benefited a lot as consumers' lives shifted onto the internet. But one reason why our networks performed is we have these high levels of investments. But that funding mechanism, the Universal Service Fund that we've relied on to fund it, is now antiquated, and it cannot support the weight of the additional investments that we need to really get the job done from a digital divide perspective, not just on the infrastructure side, but also supporting services for low-income Americans.
Now, speaking of improving internet speed, SpaceX has gotten permission from the FCC for lower orbits of its Starlink satellites. I believe this was a unanimous decision from all of the commissioners saying that this would improve speed and improve performance, despite opposition from Amazon, which of course has its own satellites but has yet to launch any of them. What is the significance of this? What does this actually mean?
Well, we're used to competitors or potential competitors coming to the FCC with different requests. Starlink is one that we're pretty optimistic about, along with a bunch of other potential low Earth orbit satellites, including the Amazon one. So when you look at the cost of covering that last 1% to 2% of the country, that is going to be the hardest to serve with traditional terrestrial-based services, these low Earth orbit satellites, whether it's SpaceX or Amazon, can get that job done for pennies on the dollar from what it would take from other technologies. So we want to give them a fair shot at competing and of making this work. And hopefully our relief that we provided recently to SpaceX helps them to continue to accelerate their build.
And what are you expecting to see from Amazon? And will that be a significant contribution to closing that gap that you mentioned?
Yeah, it's not going to be a solution for every part of the country today that's unserved. But again, that costly is 1% to 2% to 3% of the country. That's where I think we can make significant progress and taxpayers can see a real benefit. Because again, going back to universal service, the billions of dollars it would cost to bring terrestrial service there, we can potentially see with low Earth orbit satellites. So I hope SpaceX and Amazon and other low Earth orbit satellites do succeed in this space.
Last quick question, Commissioner. This $2.3 trillion infrastructure bill includes $100 billion to invest in digital infrastructure. 30 seconds. How do you want that money to be spent?
Well, first and foremost, it has to be unserved areas. There's some proposals out there right now that would spend billions of dollars upgrading areas that already have high-speed service to make sure they have future-proof networks, so to speak. I think that's a mistake.
Okay.
We need to very narrowly identify the truly unserved that have 0 megabits, and let's get them up to speed right now.
All right. FCC Commissioner Brendan Carr, good to have you back on the show. Thanks so much for stopping by.
Thanks.
All right, coming up, following the bouncing Bitcoin, the cryptocurrency going on a wild ride, falling below $30,000, then recovering. More coverage on the chaos in crypto next. This is Bloomberg.
I look at Bitcoin in particular as digital gold. And so if you're going to be long gold, Bitcoin's a better version because it's got the same macro tailwinds, but it's also very early in the adoption curve, right? People were scared of Bitcoin a few years ago. They've moved into the space, and now hedge funds are okay with it. Real money managers are okay with it. Insurance companies are okay with it. And so you're playing an adoption game and you're playing a macro game. And so I'm still a big buyer of Bitcoin.
Galaxy Digital CEO Mike Novogratz, who is still convinced Bitcoin is better than gold. Let's get back to the top story of the day, and that is crypto chaos with Bloomberg's Ed Ludlow. Ed, you've been tracking a number of different verticals. What are you looking at now?
Yeah, so he's talking about like long Bitcoin. Bitcoin takes all the headlines, but what about Ethereum, right? This is the second largest cryptocurrency by market cap, around 18%, according to coinmarketcap.com. This table tells the story. It's the best performer year to date, above Bitcoin significantly, above the Bloomberg Galaxy Crypto Index. Its performance is so good that as of May 31st, it made up 40% of the Bloomberg Galaxy Crypto Index. Bitcoin made up 40%, 10% is other, or 20% is other. Come with me into my Bloomberg terminal and look at this chart, though, because the story over the last 12 months is pretty incredible for Ethereum. Between June 22nd last year and May 11th, it rose 1,600%. And okay, we're down about 60% off that high, but it's still vastly outperforming other cryptocurrencies, including Bitcoin. It's hovering around $1,900 US. There was concern that if we hit $1,500 US, it might freefall. That didn't happen. When Bitcoin came back Tuesday, so did Ethereum. There might be another chart that we have, which basically looks at Dogecoin as well. Dogecoin? What? like, we're talking about these technicals, right? We talked about the death cross with Bitcoin. What happens if that death cross sees a fall in Bitcoin? But what about Dogecoin? Dogecoin was created as a joke, and it too has outperformed Bitcoin in this incredible way year to date. So has Ethereum. So it's a question for your guests. What are they looking at? Are they looking at the fundamentals? Are they the chartists? Or are they just going with the flow? That's an astonishing chart. Doge? Come on, Emily.
Come on, Ed. Thank you. Love it. And the animation to boot. Ed Ludlow, thanks so much. For more context, I want to bring in Kristen Boggiano, president of Crosstower, which is a U.S. and Bermuda-based digital asset trading platform. Kristen, okay, what should we be talking about? Ethereum instead of Bitcoin? Is that what we should be talking about every day instead?
Yeah, they're both very strong. I mean, I'm not, I'm still very bullish on Bitcoin. I mean, we've seen a lot of volatility with Bitcoin over the past couple of weeks, you know, dipping 29 or a little bit below today, back up, and it's continuing to hit a range. But I think there's two fundamentally, things happening in the Bitcoin market that we have to take note of. One is China. I mean, there continues to be sentiment in China about, you know, how Bitcoin should be outlawed. It needs to not happen. The miners, the OTC desks, the banks. And we've seen the hash rate decrease related to the Chinese, activity. And sentiment continues in the United States to be questionable. You know, people are weary. You know, we had Elon Musk come out and say, you know, BTC's carbon footprint is negative. So I'm not really sure I'm as bullish as, you know, given the indicators that we're seeing on Bitcoin. Ethereum is doing quite well, as you've noted in your with your previous guest.
So where does this go next, I guess is the question. You know, we had guests on earlier in the show saying it's going to go lower before it goes higher, though, like you, they are bullish over the longer term. Do you see it going lower? If so, how low? And then how long does it take for a real rebound that is sustained?
Well, it's interesting. You know, China's activity in, right now is not about the carbon footprint. It's really about, I believe, its CBDCs. It's introducing its own cryptocurrency. It already has. And it's coming up right now around the Chinese Communist Party 100th anniversary in July. I think once that happens and people start to look at the fundamentals of Bitcoin, we're going to see a rally again. And what I thought was particularly interesting about what's going on in China is that, you know, we're not talking about their concern over the carbon footprint, right? We're talking about their concern overall about the introduction for an authoritarian, regime of Bitcoin. But if you look at what's happening with Bitcoin, the fundamentals still continue to look good. You see more companies adopting Bitcoin. There's been, a chart about the number of wallets that are happening internationally, which continues to rise. As Mike Novogratz has pointed out, we continue to see institutional adoption of Bitcoin in unprecedented amounts. I mean, Paul Tudor Jones was very active, as he mentioned, money markets. We're seeing, RIAs, we're seeing insurance companies. Everybody's very interested in this asset class. But, we still have Ethereum. Ethereum's on track for its July introduction and Ethereum 2.0 rolling out at the end of the year. In all cryptocurrencies, VC activity continues to be extremely strong. I think these types of developments demonstrate that traditional and, investors continue to be bullish in this space.
Right. Well, we still have Ethereum. We still have Doge, as Ed mentioned. What's your thesis on Doge, or is it a hustle?
Well, Doge is a very interesting coin. Doge, we list Doge, Crosstower on its exchange platform lists Doge. There's clearly consumer sentiment about Doge, and Elon Musk's narrative around Doge as it potentially being, the crypto for the masses. His vision is Mars, and Mars might need a cryptocurrency, so I'm not really sure about that. But it is an interesting example of what's happening with meme coins in general. I think flipping that narrative on its head from being a joke to being something that people can hold and use is quite interesting.
Now, I want to talk about the infrastructure because that is where you are building your products. And I'm so curious what this shift in gravity from China to, perhaps everywhere else, or maybe it is mostly the United States. Does the shift in mining out of China, how does that impact the industry over the long term?
That's a great question. I believe that, there's strong sentiment in the United States for an environmentally friendly Bitcoin. And I think once we move away from the carbon footprint out of China and we look at the renewable options for Bitcoin, whether that's in North America or South America, interestingly, I think El Salvador mentioned volcano heat, but there are lots of possibilities there. And that may be in the long term extremely positive for Bitcoin.
So what's going to happen tomorrow? I guess, no, who knows? What do you think? More choppiness ahead?
Yeah, we're in such an interesting stage this year. I think particularly, we just published a report in conjunction with PwC, Elwood, and AMA. Crosstower participated in that. And in that report, it was talking about hedge funds' adoption of cryptocurrencies. What we're seeing is there are two primary reasons that traditional asset managers and hedge funds in this space are not becoming engaged. One is the lack of information, and the second is the lack of regulatory insight into this asset class.
Right.
And you're seeing activity now in Congress, right? People are talking about, well, what should we be doing? What's that regulatory framework look like? Maybe not tomorrow, but I think this year and next year, you're going to see guardrails, frameworks, and real discussion about what cryptocurrency should look like over the next, 1 to 5 years.
We are all waiting for that regulatory steer from the U.S. government. Kristen Boggiano, president of Crosstower, thank you so much for sharing your insights with us. Appreciate it. Now to a Bloomberg scoop. Peloton is working on a digital heart rate armband. This is the biggest move by the company to expand beyond stationary fitness equipment and into wearables. The device is expected to pair wirelessly with Peloton's bikes and treadmills, as well as phones, tablets, TVs. Running the company's app, shares jumped on the news, finishing the day up 8%. And it seems like shoppers are looking for some very different bargains from this year's Amazon Prime Day. According to research company Numerator, consumers are flocking to the site to buy diapers and cereal, not flat-screen TVs and laptops. Also, in the first 32 hours of the two-day event, the average order in the U.S. was about $47.14 compared to $54.64 last year. During the pandemic, shoppers shifted more of their spend online, making it more difficult for events like Prime Day to stand out. All right, coming up, a new radical move to diversify venture capital and create a new generation of Black founders who could change the world. We're going to talk to the investor behind it next. This is Bloomberg. Amazon's takeover of the movie studio MGM is set to be reviewed by the U.S. Federal Trade Commission. According to Bloomberg sources, the FTC will oversee the antitrust investigation of the deal instead of the Justice Department. The $8.45 billion deal will pose an early test for Lina Khan's agenda. The outspoken tech critic took over as chairwoman of the FTC last week, following Senate confirmation. And there's a new wave of venture capitalists on a quest to cultivate a new, more diverse generation of founders. But is this influx of funds making real change? Joining me for more on this topic, Barry Givens, managing partner at Collab Capital, who's just recently closed a $50 million fund to back startups led exclusively by Black founders. Barry, thank you so much for joining us. So first, let's talk about your strategy here, your mission, and where you're going to put this money to work.
Yes, thank you for having me. Super excited about what we're doing at Collab Capital, with our focus being on getting Black innovative founders, the funding that they've needed forever, since 10 years ago when I became a founder. But the way that we're doing it is a tad bit different than traditional venture capital. The main thing that we're doing different is that we are increasing the chances of success for founders by changing the definition of success. In traditional venture capital, typically you're either a unicorn or you're a bust. And that just doesn't work, especially for communities of color, where we need to expand what it means to be successful. And so we created a new investment vehicle called a space agreement that allows us to not only, chase after the unicorns, but also have successes where companies are exiting at or running companies at 10, 15, $20 million small businesses and still being able to reap the benefits of venture capital. And so basically we are bringing together, making sure that the founders and the funders are on having the same mindset and on an equal playing field.
I think a lot about how different the world might be if more Black founders, if more women had gotten a chance to start the next Google or Facebook or Apple or Amazon, how different the world might be. What do you think the answer to that question is? If we give these folks opportunity now, how does the world look different? How does tech look different in a couple of decades?
Oh, the world is completely different. When you talk about I hate the word trickle down, but I'll use it here. But you talk about the trickle down of what it looks like when someone in your community is successful. The downstream positivity that comes from that is immense. And you don't have to look any further than my partner, Jewel Burks, and her company, PartPick, that's sold to Amazon with 3 Black founders. And between those 3, they all went back and gave back to their communities. Jewel became an angel investor and has invested in 10 other Black founders. Jason went back to Kansas City and did a lot of work for Black founders in Kansas City. Dr. Nashley, she went back to her home in Jackson, Mississippi, and is building a tech hub in Jackson, Mississippi. And this is just one company with Black founders, but that trickle down and what that is going to mean for the Black community in their respective cities is going to be an immensely positive effect. And so what we're trying to do is do that 100 more times, 1,000 more times. And what the world looks like, particularly for the Black community, is that we look up in 20 years and we have more angel investors writing checks to the innovation economy. We have more children getting into technology fields and all these positive things that come from it downstream.
Now, you've raised a $50 million fund. You are up against traditional VC firms that are raising billion-dollar funds. Are these traditional funds doing enough? And is $50 million, which is great, but it's not $1 billion, is it enough to change the ratio, to change the equation, to change how business is done and how new technology is created?
No, 50 million is not enough. Just to be completely, straightforward, 50 million is not enough, but it is enough to prove out that there are other options out there for success and to hopefully allow other VCs to see our success as an opportunity for them to stop leaving communities of color, particularly the Black community, out of their funding opportunities. And so hopefully we can be the beacon, the shining light, the example that will increase this diversity. And it's not just us. There are a lot of other funds doing it now as well that were able to get funded over the last, 12 to 18 months. And so hopefully we'll see a change in this industry, but we won't know that probably for another 10 years, but we're doing the work today to make sure we're planting the right seeds to make sure that change comes to pass.
Now, tell me a little bit about your LPs, your investors. Who are they? Are they, traditional university endowments? Are they more angel investors? Because I want to know more about the people behind you who are really interested in putting money to work this way.
Yes, so we have a plethora of types of LPs in our fund, ranging from really large corporations like Google and Amazon, Google and Apple and Goldman Sachs and Bank of America, and we have foundations like Mellon Foundation, Kauffman, and so, but all the way down, what's really important to me is that we also have our peers that are a part of the fund as well. So Black founders like Harold from man, just had a brain fart here. Harold and Savitra Wilson and other Black founders that have actually joined us as LPs in the fund while they're actually still building their companies. And that's the change that we want to see down the line, is that these founders that we're investing in become investors in the future, but we actually started that today by allowing our fund to be more accessible to Black investors as well.
All right, it's live TV, Barry. As long as you keep talking, it is all good. Thank you. Barry Givens, Collab Capital Managing Partner, will be watching to see how you put this money to work. Appreciate you taking the time to share that with us. Meantime, we do have some breaking news that Morgan Stanley has decided to prevent unvaccinated people from entering their New York office. This is according to a report from the Financial Times, citing an internal memo that it has seen. All employees, contingent workforce, clients, and visitors will be required to attest to being fully vaccinated in order to get into the Morgan Stanley office. No share movement as of now, but of course a fairly dramatic stake in the ground being put by Morgan Stanley. All right, coming up, YouTube taking on TikTok by rolling out a brand new short-form video feature. The company has also set aside $100 million to pay its creators. We're going to have that story next. And as we head to break, voters in New York City's mayoral race testing a new ballot system called Ranked Choice. The winner won't be clear for weeks, but it's a very crowded field of Democratic candidates, the slate of candidates, the city's most diverse ever, and could produce New York's first woman or Asian mayor. Among the key issues for New York City, wiping out crime, education, and a post-pandemic economic recovery. Tech is on the mind too, as there are more than 1 million tech jobs and 5,500 startups in New York, according to Built in NYC. This is Bloomberg. Microsoft joined Apple in the exclusive $2 trillion club today, albeit briefly. Shares rising as much as 1.2% on Tuesday to cross the threshold, but closing the day just shy of that mark. So far this year, the stock up 19%, outperforming both Apple and Amazon. Microsoft has been buoyed by bets that its dominance in cloud computing and enterprise software will continue in a post-pandemic world. Meantime, YouTube is taking on TikTok, the company's Shorts feature, winning over creators as it plans to begin paying contributors based on new metrics of video engagement and not the traditional advertising model that's associated with typical YouTube videos. Joining me now for more on this story, Bloomberg Tech's Mark Bergen. So is Shorts really working, and is it a major threat to TikTok?
From what we've seen, it's been a pretty good success. Google has talked about it. Sundar Pichai, the CEO, had mentioned it on the shareholder meeting earlier this month, which is sort of rare. As far as a threat to TikTok, I mean, TikTok is still growing. I mean, I think that clearly, like, they're competing for the same viewers, they're competing for the same creators now. It'll be really interesting later this summer when YouTube plans to start paying out from its $100 million fund. Clearly, Google has a lot more money to throw around there. But they're kind of late to this party, right? Like, Facebook put out its own TikTok copycat, and now YouTube is doing that too.
So what are creators saying? You know, we did a whole series on TikTok, and Katie Feeney, very popular creator, I remember her saying specifically that TikTok wasn't necessarily super helpful as a company, though the platform is, of course, there to use. But some of these other companies like Instagram, Snap have been more helpful in terms of offering support to creators directly.
Yeah, I mean, YouTube has a benefit of, you know, it's been around having this kind of creator business, sharing money with YouTubers for like over 13, 14 years now. It is the leader in this market. It built and founded this creator economy. The downside of that is it's so massive, and it's really hard for people to break out. And we had this point this morning that what's short in the story, this Shorts is actually giving this way for, if you're a newcomer to YouTube, if even in some way we talk to a makeup tutorial, makeup is huge, it's so crowded, it's really hard to break free. They found the ways, who knows how long it's gonna last. You know, there are a lot of creators that still point out that it's a constant gripe they'll have with YouTube, no matter what, is that YouTube is not giving them enough attention. But historically, it's been the one place where you could really earn a living.
So how does this fit into YouTube's broader business strategy as we come out of the pandemic and people are spending potentially less time online?
That's a good point. I mean, YouTube is becoming far more critical to Google, certainly to its advertising strategy, its business, as well as what their big focus on commerce. And we talked to some creators that are thinking about using commerce. TikTok is getting into commerce too. It's harder to imagine that format of a short video format being willing to sell someone rather than a longer, like if you're selling a product or a good. But who knows? Clearly the short form video is really popular. It is like the zeitgeist right now. If Google can find a way to integrate that with their commerce, that's kind of my prediction. I think that'll go a long way.
Popular indeed, even if it's among folks decades younger than we are. No offense, Mark Bergen, who of course covers YouTube for us. Thank you so much for bringing us that story. All right, that does it for this edition of Bloomberg Technology. Make sure you join us tomorrow. We're going to be joined by Julie Wainwright, founder and CEO of The Real Real, as well as the CEO of Substack, Chris Best, talking about going directly to your audience. You don't want to miss it. I'm Emily Chang in San Francisco. This is Bloomberg.